India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, good morning.
Hi, good morning. And in case you're guessing, we were trying to show a little bit of pink of health here and a tinge of teal or green on that side. We're trying to do our bit because otherwise this market is dealing with a huge onslaught of, negative to slightly difficult cues.
Well, that's right. We have our domestic challenges in front of us. But I think overnight, suddenly the US market said, let's see a day of profit taking. So we have both the global as well as the domestic headwind now. But you never know when there's a lot of pessimism. That provides the best opportunity.
I remember yesterday, we were talking about this, whether we are alone in misery or we have company. Now we have some company this morning.
Feels better, right? But I think, actually the fact is that India and the US are, in a way, the stock markets, that is, are joined at the hip. I mean, take 2022, 23, 24. These are the two biggest and the best performing markets in the world. I mean, there's a Korea which comes and goes, but Japan which has come and gone. But these are the two big markets and very high correlation between these two markets. And, we, of course, started our correction. Let's see if in the US we are starting something. So let's just sort of rewind the clock back. You've got... and start with how we closed, because that'll matter. U.S. equities down for the third straight session. The S&P was down about 0.9%. The Nasdaq was down about 1.6% as well. The WIX jumped about 5% to about 19 plus, and it's the highest since the 7th of October. After hours, you had Tesla, which came out with earnings, beat expectations. Stock was up 10%. That's a will that have a celebratory effect on other stocks as well tomorrow, later tonight, when we start trading? That needs to be seen. But that's a big stock and a big gain. So we had a bit of a sell-off early. I mean, I think it was last Friday, but through the course of the week, both yields and the dollar index has largely pushed higher. So the 10-year now, another 4 basis points last night to 4.25. And you've got the dollar index, which was up about 0.33% to 104.5. The point is, I think what's happening, of course, is the market is trying to price in a Trump victory. As I've been saying, bad for bonds. I mean, of course, anything can happen, but looks like from what he said he will do, bad for bonds and good for stocks. And if it's bad for bonds, which is playing out right now, can it be really bad for stocks? And I think the chances of a Trump victory now, of course, at least from a betting market point of view, seems to be pretty high, comfortably ahead of his opponent. In that sense, I mean, if that is what is being priced in, will that provide support to the US market? Can the US really correct into a Trump victory? I mean, I think that's a silver lining in that sense. We'll see, because there is still, things can change and it's an election and anything can happen. Last one, of course, was very, very close. And this one, according to some, is still very close to call, despite what some of these betting markets are saying. Dollar going up means that the JPY is coming off, and how, right? I mean, the dollar JPY cross is up 7% month to date. That's the Japanese yen currency we are talking about. Got to about 153.5, and then it kind of came off a little bit. So respected that resistance. Oil prices are down 1% to about 75.2, but there is still some comments here and there. The US is trying to avoid a conflict, but there are still stray comments here and there coming that, we will retaliate against Iran, etc., from Israel. So I think on watch in that sense. Here in India, just to tie in the levels, we closed about 150 points off the intraday high yesterday. Again, extremely volatile session. The support comes in at 24,132, which is the daily lower Bollinger Band. That is the support. The resistance comes in at 24,270, which is the 40-hourly exponential moving average. Bank Nifty, it ended with minor cut yesterday. It did not break below 51,000. If you do break below 51,000, then you're looking at a test of about 50,194, which is the 7th of October low. And the important resistance here is the simple 20-day moving average, which stands at 52,004 as of yesterday's close. So very tight ranges here. And I think we just need to give it time for the market to tell us what it wants to do. Hopefully, with the 7% correction that we've already seen on the Nifty, the best that can happen is that we've kind of hit some kind of a bottom, and then you go into a time correction. But first, you got to find that bottom before the market starts to stabilize, and then it may flatline for a while. That's fine, but we are not in that phase yet. GIFT Nifty will come up on your screen, and that will give you a sense of how we're likely to start. 60 points higher on the GIFT Nifty. Surabhi.
Yeah, I don't know if this is exactly how it plays out. The bulls would love that 60-point higher start, but even looking at the Asian market screens this morning, not quite playing out as per script. A lot of the markets, the China-related markets, for instance, they're down and out. Hong Kong, mainland China, many of these markets are weak. The Nikkei is not doing anything, absolutely flat. You're seeing Taiwan there also with a tinge of red. In terms of some additional data out of Asia this morning, you have the South Korean third quarter GDP numbers are not looking good at all. I mean, the South Korean economy has just about averted the definition of a technical recession. Growth is just 0.1% in the third quarter. It's well below estimates. So and that's one more concern. By the way, on the currency front, this huge surge in the dollar has meant a weakness on the yen. And the dollar-yen equation is very interesting because the yen is at now a 3-month low versus the greenback. Okay, let's talk about the numbers that are on your screen. And this is a big problem for the market. It's simply not going away. Remember, yesterday we were talking about how the market was cruising till about 2:30. And in the last 1 hour, we had some large cap selling. And it's showing up in the numbers again, about 5,600 crores down from the FPI side, and domestic institutions continue to offer some semblance of support. The problem is the market has become a sell on every rally market. That's become the nature. So the bounces are getting sold into. Two important trends have emerged from the earnings season so far, and they both don't look good. One of them is the fact that there is a broad-based consumption slowdown. It's showing up in management commentary in numbers. Urban is a talking point. And the second one is this asset quality issue that's showing up across NBFCs, lenders. Most are reporting rise in provisioning, rise in slippages. If you look at the numbers that were reported yesterday, just some of the big ones, these concerns were showing up in the HUL numbers as well. The volume growth has missed the mark, slightly missed the mark at about 3%. The EBITDA margin has dipped. And even if you're looking at the revenue growth, what are we talking about? We're talking about growth of just 1.5% on revenue for such a large consumer giant. That's telling a story. The question is it ending in one quarter or not? And that's going to be the point of debate as we go forward as well. But the management is acknowledging this slowdown, especially in the urban markets. Look at VIP industries. I mean, as Manglam called it, it's a howler all the way. I mean, you've got losses at the EBITDA level, losses at the PAT level. Clearly, some company-specific issues there as well. Look at Pidilite. Again, volume growth is below estimates. 6% versus the estimates of about 10%. Of course, Pidilite is saying maybe it was because of the rains and, that impacted this particular company specifically. Large point is there is slowdown. Come to the financial numbers that we saw. I'll just take two. Case in point, Piramal Finance. Margins are fine, but again, you're seeing asset quality stress even here. Even their, net interest income growth was okay, but it's all about asset quality. And I think AU Small Finance is going to grab a lot of attentions and headlines today because there's a marked increase in slippages and credit costs. Slippages of the annualized slippage ratio has crossed 3%. And if you're looking at the credit costs, particularly on the credit card segment, that's shown a massive increase. It's 90 bips higher than what the company had guided for. So unsecured stress, MFI stress, all of these have emerged as major, major concerns. Quick check on today's numbers. We have a busy day ahead. Let's put the list up for you. There's ITC, there's IndusInd Bank, there's NTPC, three big Nifty names. There's Colgate, there's Godrej, and there is United Breweries. By the way, on numbers, I think the one that didn't miss by too much of a margin was kind of okay was United Spirits. So that one looked better than a lot of the other FMCG and other consumer names.
Well, in terms of an approach to trade today, I think that GIFT Nifty suggesting the 60-point gap up, you shouldn't be chasing that because if you want to buy, you'll get an intraday dip. That's what the screen is telling you. And if you're trading, you trade only if you're very brave, because if you're looking to buy that dip. Well, let's focus on the two top cues that we got overnight. One is the US yield, the 10-year yield. That's moved to a 3-month high. You also have the dollar index that's at a 3-month high. That's not great news from an India market perspective or an emerging market perspective. Yesterday, what happened? The FI sold yet again. And, if you're looking at the futures data, well, there was unwinding of positions both on the Nifty as well as on the Nifty Bank. So a couple of factors that are playing out here, lightening of positions in the futures market, and you have the FIs that are selling in the cash market. That's what's playing out. What did they do though in the F&O market? The FIs in yesterday's trading session on index futures, they added some mild longs, some shorts as well, though they continue to remain net short on the index. So the FIs are net short. And the clients, they are holding at more than 2 lakh contracts on the long side. The FI short positioning, well, it's not in an extreme. You know, if it was at 3.5 lakh contracts, then that is an extreme. So it's actually far away from those levels, though they continue to remain net short. Options data comes up for you, and this is important today because the weekly expiry plays out, and both these two strikes were fairly active. 24,500 call, 24,400 put, both of them active. And on the 24,400 put, the premium came down to around 65 rupees. So you just punch in these numbers, you'll get your support zone. So for today's trading session, the 24,340 mark becomes extremely important that it holds out. And in case you see a bit of a bounce, we need to get past the 100 DMA, which incidentally is around the options data resistance as well. So that's the important mark that you want to look at. If you want to buy, you'll want to buy closer to the lower end of the range, rather than chasing the gap up. The Nifty bank yesterday showed signs that it was going to run away, and then after a couple of hours, it just fizzled away. So on the upside, the 100, 50 and 20 DMA, they'll become resistance zones in that order itself. So you wanted to trade above the 100 DMA mark. Stocks that I'm looking at, HUL, yes, there's a slowdown. Yes, there's, the commentary wasn't very, very good. But in the last 1 month, the stock is down closer around 12%. So how much of the bad news is in the price? And in times like this, there is a flight to quality. You want to find some hiding spots as well, stocks that have underperformed as well. So maybe, if it starts off in the red, intraday, you could see a bit of recovery on HUL. But don't chase the gap up. If you want to buy, you'll get an intraday dip.
Okay, all right, Nigel, thank you very much for that. So that's the setup as we see it. Richard Harris is